portfolio. So this is going to be a new portfolio that I started in April during the dip. Had some extra funds, some extra monies. I split it up into the traditional brokerage account that I've been showing y'all, but I didn't show y'all my retirement Roth IRA. So this one I've been doing a little bit more. It's still high growth stocks, very similar to here, but other companies that I really want to make this portfolio. So yeah, I'm going to show y'all that. Probably I won't show this every week like I do the regular one. This might be an every now and then type of thing. If you know, you know. But if you tuned in to the videos, y'all getting a sneak peek. And this would be a good game if you really just now getting into the investing. You know what I mean? So yeah. This is my retirement portfolio that I built up. I've been building up since April. All time we're up 32%. Now, if you're not familiar with the Roth IRA is, it's a tax sheltered account. Roth IRA is a tax sheltered account that you put up to like $77,000 a year max after post tax contribution. So if you get paid from your job, whatever you get paid from, you put that into this account, only up to $7,000-ish a year. But when you withdraw, it's all tax free versus the account I've been showing y'all. If I sell something, I got to pay tax on it. The Roth IRA is all tax free when I withdraw it, but you have to be like 59 and a half. So that's why I'm doing these option plays in the Roth IRA, because it's more of a tax shelter. I don't have to pay taxes on this when I take it out. Now, this portfolio is it's actually for someone else. I'm managing it, but yeah, they'll be turning 60 in the next 4 years-ish or so, 4 years. So this is great for them. You know what I mean? This is great for them. Because they're going to be getting some good returns on whatever money they give me. Hopefully, I'm hoping they can give me some more. But great returns on this. But let's dive into it a little bit. So, as I can see, I got my Zeta in here. Of course, I got my Zeta. I got my Palantir. I have one share of Palantir in here. And it's crazy because I bought this at 122 when it hit. All-time highs were 125, bro. This goes to show you can't time the market. Timing the market. I bought Palantir before their last earnings. You know what I mean? And it went to 125, then it came down to 122-ish. I said, forget it. I'm going to buy it. It has not gone down since. I'm up 26% off of that as it is. And this is buying at highs. You know, now can it dip back to 90? Cool. I will buy more happily. Can it dip to 110 again? Yes. Can it dip to 90? Probably, maybe. I'll buy more, but ain't no trip over there. Palantir is they build and deploy software platforms, operating system for commercial and government segment. So think big data, think software, think AI, big AI, government AI, like high security clearance, all that type of stuff, like big dog. Next, we got more AMD. I love AMD. So I had to put it in here. I bought about one share, 18% of this portfolio. I bought at 109. We're at 170 right now. So that was a great buy here. That was a beautiful buy here. Beautiful buy here. That was a beautiful buy here. That's what I'm telling y'all. Just tap in with me. You tap in with JRuss TV, I make you rich. Tap in with JRuss. This is not financial advice. This is not financial advice. Tap in with JRuss TV. We rich. We rich. Tap in with JRuss TV, I make you rich. But just I'm just showing y'all what I do. I'm showing y'all what I do. Not stock investment advice. Just showing y'all what I do, man. I'm just showing y'all what I do. Cool, you know. Just showing y'all what I do. Appreciate y'all still tuning in. Follow me on Instagram, X, JRuss TV. But yep, I need to finish this segment up. So next we got more hymns. I just went over hymns in the last one, so y'all good on that. Average cost is $46. I'm up 33% on the hymns. Add in Robinhood. I love Hood. Hood. Actually, I might buy more of this on open. How much cash I got in here? I got $2. Dang. I want to buy more Hood at 99. Oh yeah, at 99. Yeah, I'm gonna see if I can buy some on Monday. 99 in this portfolio. I'm not against it. I bought this at $57. Crazy. Crazy returns, bro. Crazy returns. And then FUBO TV, short Disney deal going through. Disney will be buying 70% of them, owning 70% of FUBO. FUBO will be a separate entity and still have own 30%. I got in some shares at $2.65. I literally hit the bottom. I hit the bottom precisely on FUBO a couple months ago. Not even a couple, it was like a month or some change ago. So I'm up 42% on that already. It's been breaking out, bro. It's been breaking out. Y'all can see right here in a month. This day right here, we had some news. They released like preliminary Q2 results. Their earning report is next Friday, August 8th, and they had good numbers. It gave very, very good hints that the deal is going through. The Disney deal is going through. So this is why it jumped to 427. Then it went back down. A lot of manipulation has been happening, but bro, it's crazy. We're still in the threes right now. If this right here is a stock I say buy. I usually didn't say buy, but like buy this. It's very undervalued right now compared to the potential over this next year. And I think it's going to do pretty good. FUBO TV it's a sports first streaming platform. Do some research on it. And I even have calls on here too. Now, call option is essentially, I'm gonna put it on. Call option essentially you can leverage if you think a stock is going to a certain price, you can kind of leverage some call options, what they're called, to have access of 100 shares for a premium. Instead of buying 100 shares, you can buy a contract that has the same traction as 100 shares for a premium. It's very risky. It's very risky, but if you want to see amplified gains, this is a strategy you can use. But it's very risky. Warning y'all, it's very risky. I'm not a financial advisor, but it can also magnify your losses. So if this stock goes, well, let me give y'all an example. Let me show y'all right here, bro. So essentially, I can simulate my returns. So if FUBO, if the deal don't go through and this joint go back to $2 or whatever, I'm losing $78. I could possibly lose all my money that I put in, but I don't think that's happening. I could lose a lot. I can lose it all. Is my screen showing? Yeah, it's showing. I could lose it all, bro. But me personally, in my research, once the Disney deal goes through, this bad boy is going to $8 to $10 plus. Oh, you say? All right, bet. This jump hit $8. I'll come up $600. I come up $600 right now. You know what I mean? Is this similar to gambling? Not really. This is more of a calculated risk. I wouldn't say gambling. It's more of a calculated risk. But yeah. If it goes to $8, I come up $468. If it goes to $10, I'll be up $700. You know what I mean? And that's off of what? $110 investment. I put $50 in, then I put $110 in here. That's off $110 investment. That's going to be a crazy return. You know what I mean? It's not financial advice. Like I said, do your own research, do your own due diligence. But this is one of my strategies, and I have it expiring. It's certain expiration dates. I have it expiring January 2027. So I have like a year and a half for this expires. So I like doing long. These are called leaps, long equity. What do they stand for? Long-term equity and anticipation securities. Anticipation. It says it right there. Anticipation securities. You know what I mean? And yeah, so I have until January 2027 to expire. So it gives me time. It gives me more leverage to use time as an advantage in case anything can happen. Because when I put this in, when I started this, I didn't know when the FUBO deal was really going through. It could have not gone through. So I'm pretty confident it's going through. It still hasn't gone through yet, but I'm getting signs that it is. And I'm getting signs that it is. And, like I said, I think it could be good. We're already up 14% already. I can see right here. We up 14% right here. Yeah, so this is just the beginning. This is just the beginning right here for this. And then I'm gonna put another call in for Zeta, a $25 call for Zeta. Shoot. Another $25 call for Zeta as well. So hopefully that should be going through. They have earnings coming up. I think this is very undervalued stock. That's one of my strategies too. I buy leap options on companies that I've done research on. Hold on, put a big string. That's another strategy. I buy leap options on companies that I've done research and due diligence on. So why not? You know what I mean? I've done a lot of research on AMD, so that means I'm gonna buy AMD leap options if I think it's going higher. I did a lot of due diligence on if the premium is in my budget, because some of these premiums be like 500 for one contract, 1,000 for one contract, but the return is still good. Sometimes you gotta pay a premium, but I don't have that much capital right now to do that. So if I can find something a little lower, that's cool. And I still have commission on the stock, cool. You know what I mean? But that's one of my strategies I do there. I've done this. I don't really do leap options that often, to be honest with you. I don't do leap options that often. On average, right now, it's been like every 2 years I've been doing a leap option. And I like that timeline because I don't want to just do a whole bunch. I want to really do my due diligence. Like I said, these are really risky. These are really risky strategies. So be on research, but I think this year I'll have a great year with leap options and make a lot of money. That's what it's all about. You feel me? That's what it's all about. But I appreciate y'all tuning in for this segment. I'm gonna go ahead and get into some live reaction videos.